All right, market outlook. So I got the S&P chart up right now. I mean, honestly, we just broke this 324 macro area, which was the gap down from February. Nice consolidation in front of that. And then, the last couple weeks, we've just been grinding higher. We're not really overbought or anything. This is just completely healthy action right now. This is monster resistance now, this all-time high level. I wouldn't be surprised to see weakness there, but right now we've just been trending higher. So, it's tough to argue against the trend. And it's most pronounced in NASDAQ. We keep seeing, we talk about this every week, but now it didn't even give the deep pullback. The pullbacks are getting more shallow, I guess would be the term. We're not even hitting this trend line. It's just really just this 21-day simple moving average. We can't seem to close below it. We did here for a day, right back above it, closed right on it here, and now we're back up in the trend, trending higher. So trend is your friend. It's very simple.
I agree with that. So Jake, if you want, I put a couple charts we'll go over. If you want to start with that VCR.
Oh, I got it.
All right, so this kind of goes along with your theme with the SPY. Like we're running into that prior retest. So I kind of drew out the consumer discretionary sector, which kind of is trading a little bit ahead of what I'm thinking the SPY will do. So we have the all-time highs to the left, similar with the SPY. We retested that prior high, which you mentioned would be like major resistance in the SPY, similar with this sector. And we kind of flagged a little bit and then we later broke out, and the consumer discretionary sector is much higher. And then if you go over to the SPY, which you mentioned, we're like a month behind the VCR sector, like how it is. Like it's just getting back to that retest. So I would kind of expect it, like you mentioned, we need some resistance, but then we eventually drift higher. And again, given some of the conversation I've had recently, especially this past weekend with some of your friends in Brooklyn who all thought the world was going to end, the fact that we're back at highs leads me to believe that we too will probably see higher highs before we see any lower lows. Getting a bit more specific.
Why you always gotta be talking shit? Why you always gotta be talking shit? You're talking to your friends, those dumb motherfuckers. All right. No, I just have mental notes. Taking mental notes over here.
Note of that. All right. So next up, we got MDY. Mid caps through 360 is an area I'm looking to add through. Energy sector VDE up through 52, and VHG for healthcare through all-time highs through that 208 area versus 200. And then lastly, VNQ, which is the real estate sector, up through 82 versus 80. So a lot of little tight little spots you can pick up some positions in some of these larger markets and sectors. Those are the ones I'll keep my eye on this week.